Dear students and working accountants, welcome to my Smart Talent Drive YouTube channel. My name is Babu Rao from Hyderabad. Today, our topic is very important topic, and this topic will not be available in any channels in our side, that is in Andhra and Telangana, and also in English or Telugu. Some video, some channels in Hindi and the North India. So this is available in that, but in that not in this way, in a different way. So it's available, but in Hindi, in English or the regional language, Telugu, these videos are not available. So you follow these videos very carefully, and I'm making 4 videos, that is 4 parts for the topic. So that will be very easy to understand, but you have to follow very carefully. So the topic is real estate sector under the GST. So what is the position of real estate sector? Real estate sector under GST. So for this, I am dividing it into 4 parts for the videos. Okay, I will do that. So we will share the screen. So here, so this is the real estate sector. So this material is very in a simple language, very easy to understand. This is the material of the Institute of Chartered Accountants of India, Vijayawada branch, and this material is made by Mr. CHUNDURU. So he is a famous chartered accountant, and he is a member of the institute, as well as he is the trainer to all the students and the workshops also he conducts. He is a very eminent person. SUDHEER sir. Okay. So with this permission, I am using this material because this is very easy to understand. Okay. Now we enter the topic. So here, the real estate sector. What is the position of the real estate sector under the GST, and what is the tax liability for the real estate sector? This real estate sector we call in 2 ways. One is, so real estate sector means construction of buildings. They may be residential as well as commercial. So that for the commercial sector, this real estate is called simply real estate sector, means commercial. For residential, it is called as real estate, residential real estate sector. See, commercial means RES, residential means RRES, residential real estate sector and commercial real estate sector. So from the beginning, there was taxability on that real estate, but before the introduction of GST, it was under service tax. And after introduction of GST in 2017, that is on 1st July 2017, some changes are made, and the tax is imposed uniformly at a specified rate of 18%. Specified rate of 18%, and the effective rate will be 12%. Effective rate is 12%. The actual specified rate is 18%. So in the next time, so when we are discussing about this, we will understand what is meant by the specified rate 18% and what is meant by the effective rate 12%. That we will understand. So this is the thing. So it was the taxable liability and it was the taxable rate for the real estate, whether it is commercial real estate or residential real estate, whatever it may be, it was uniform 12%. That is 12% is the effective rate. But now, due to this real estate sector, there is lot of scope for imposing tax, GST, as well as to encourage the residential real estate, residential real estate from 2019, that is from 1st April 2019, some changes are made for the residential real estate sector. The rates, that is GST rates, are reduced, but for the commercial real estate, the rates were continued as it is from 2017. That is before 19 also. The same rate is continuing now for the commercial real estate. That is only real estate sector. Residential real estate sector, the rates are reduced completely. This is what we are going to learn. Okay, so tax types of construction projects and tax liabilities. The total construction projects. Real estate will make the project means constructing of buildings is called a project. So the construction of the projects that we will learn in a systematic way for that purpose. These real estate projects, all the projects, these projects are divided into 4 types. These projects are divided into 4 types. So what is the different, what are the 4 types and what is the tax liability? So in all the cases of the construction projects, that is real estate, there are 3 parties. There are 3 parties. One is the owner of the land. The building will be, anything will be constructed on the land. So the owner of the land called as landowner, and the person who is constructing the project is called the builder or promoter. In the circulars and in all the circulars and in the issued by the government circulars and some other particulars, all the circulars, it is named as promoter. So promoter or the builder, which we call, both are same. Promoter or builder, both are same. Okay, and the builder. And the third one is the after purchasing, what they will do. So after constructing, what they will do. These constructed projects, buildings, or whatever it may be, they will be sold to the customers or consumers. They will be sold to the customers. That is why builder, landowner, builder, and customers. These are the 3 parties. Which what we are going to learn is what are the obligations of the landowner, what are the obligations of the builder or promoter, and what are the obligations of the customer. This is what we are going to learn. And here, so we are dividing into 4 parts. So in this case, I will make the videos in 4 parts. That is, for the first one, we will make 1 video, and the second we will take up at the end, and 3 and 4, both 1 video is enough. For this both, I will make 1 video, 2 videos. For this one, this is a long, enormous subject we have discussed elaborately. That's why for this, I will make 2 videos totally. First one is 1, 3 and 4, second video. And that for the second one, we will make 2 videos. Okay. So this is what we are going to do. And here, I will tell you in brief, what are the 4 types? Whatever the project is, the project, it will fall under these 4 only. Just like types of accounts, personal accounts, real accounts, family accounts. All the accounts will fall in this 3 only. Like that, any project, construction project, will fall under these. So what is the different types of projects and liability, tax liability? First one is builder purchasing a land and constructs as for the purpose of sale. Okay, that means mostly we are concentrating on residential real estate, residential real estate. In that, this commercial also will be included. Okay, so the builder will purchase the land for himself. He will purchase the land and construct the buildings. You can call as residential flats or residential units. You will construct the units for selling to the customers for the purpose of sale. So this is the one, purchasing the land and selling, constructing and selling. The second one is the builder will not purchase the land, but the landowner will enter into an agreement with the builder to construct buildings, to develop the land. Means development means constructing. So construct the buildings, and the buildings constructed, that is the units constructed, will be shared by both. So by all the expenses for the construction will be met by the builder only. He will meet all the expenses, he will construct. In this case, both are benefited. Builder and the landowner, without spending anything, he is getting many units for his share. And for the builder, he is also benefited here without any land or anything, by spending the money only for construction. He is getting some flats. Okay. And they will share. And the sharing will be depends on the locality, area, and demand for the project, the demand for the units, that is demand for the residential units. So depending on that, they will fix the rate. So 50-50. So 50-50, and the builder 60 and landowner 40, like that. They will agreed ratio. They will divide the flats and they will sell their respective flats. So builder will sell his flats, his share of flats, and the landowner will sell his share of flats. And the agreement which they enter is called as joint development agreement. Joint development agreement, JDA, joint development agreement. Both enter into agreement for the development. But here, in this joint development agreement, see here the landowner is not transferring the land, he is not selling the land and transferring the land. What he will do is, under the JDA, he will transfer a right called as development right. So this is called as transfer of development right, TDR. So he will give a TDR, he will transfer the development right to the builder, and he will construct the building by spending the total money, and the flats will be shared by both the parties, and they will sell their respective flats. And the third one is works contract, means in this case, the buyer, the builder is not purchasing any land. Seller, the landowner is not selling the land. The land will be with the landowner only. And after construction, the building constructed also will be with the landowner only. What the works contract will be, will give only construction services. That is, the landowner will ask you. So as per the specifications, you please construct the building. You construct the residential units or anything. You construct the real estate unit. That is, you construct the building or construct the flats. And that is what you do. And you meet all the expenses you pay. That is, labor, material, and everything will be met by the builder. Only he will do by making all these things. He will give the construction service. This is called as works contractor. So land will be with the owner, he will not selling the land. And builder is not purchasing the land. He is giving only construction service, means he will take the labor, he will purchase the material. With the help of labor and material, he will construct the building as per the specification, and we hand over the buildings, that is the building or the flats, to the landowner at an agreed price. This is called the works contractor. So land is, the owner is having land, and expenses will be met by him, and he will make the construction. That is construction services. The fourth one is labor contractor. Labor contract means the builder will supply only labor. So here the reference is, here he will supply the labor as well as material also. He will spend the material expense also. Both he will be undertake the material and labor. Landowner is not paying anything. He will get the price only. But in this case, if the contract is given both for the total construction, the contractor of the builder, he may use inferior, means less quality of the material. Less quality material also he can use. That is why the landowner will ask you, you supply the labor and finish the complete construction work with the labor. Whatever material is required, that I will supply. So he will buy the material, he will supply the material. The owner will supply the material, and the builder will supply the contract, the labor, and the work will be finished for the person. That is, for the labor supply, he will charge the amount. This is what called as the labor contractor, who only supplies labor. In this case, material cost is incurred by the owner only. Material cost is incurred by the owner. Labor cost is incurred by the contractor. That is, the builder, he will supply the labor, and the work will be finished at an agreed price. In this case, both labor and both material will be incurred by the builder only, and that amount will be paid by the landowner. So these are the four types. First, we will take up. In all these cases, what you have to do is, we have to understand perfectly, carefully, we have to understand the provision in all these cases, and we have to understand well, and we have to follow that exactly as given in the Act, as per the GST. We have to follow, that is called as compliance. We have to comply with the provisions exactly. Okay, not tax evasion. We have to comply with that, and we have to plan the tax, called as tax planning. How you can reduce the tax, but not tax evasion. By using this tax planning, we can do. we can reduce the tax, that's all. This is what we have to learn now. First of all, we will take up the first one. Builder purchasing a land and constructs flats for the purpose of sale. So purchasing the land from the landowner will purchase, then you will be the owner. He will construct the buildings, that is flats, means residential or any unit, residential units, he will purchase, he will construct and he will sell them. This is the first one. Right away, the straight business, purchasing land, constructing buildings, that is constructing the flats and selling them. And he's selling the buyer, sorry, the builder will sell these flats, but selling will be done in 2 ways. One is when the construction is started, during the construction itself, he will sell the flats. He will sell the flats and he will take some money from the customer. It is called as, we can call it as booking also. So the customers will book the flats and they will pay some amount called as advance or booking advance or booking amount, whatever it may be. He will pay some amount and the builder will complete the construction and he will collect the balance amount and he will hand over the building. That is, he will hand over the flat or anything, the residential unit. He will hand over the residential unit. This is called as sale during construction phase. During the construction itself, the amount he is selling that by receiving some amount now and the balance after completion he will receive. This is the one method. Another one is the builder will sell to the customers only after completing of the construction. Total construction is completed and after completion you will get a from the authority, competent authority, municipality, like you will get completion certificate. From the completion certificate only the municipal authority will levy the tax, land tax, that is called building tax, you cannot answer, house tax. They will charge the tax from that day. That is why after completion and getting the what we call the completion certificate, then only he will sell the building to the owner. That means the total amount will be paid at the time of purchase of the building. After completion, total amount is paid. And purchased by the customer. For example, in this case, the total price, or we can call it total value, total price of the unit, that is residential unit, or you take the flat is 40 lakhs. So in this case, for example, at the time of booking, that is during construction, he will book the flat and he will pay 10,000. So it is called as advance, he paid 10,000. And after completion, the balance is 30 lakhs. So the balance 30 lakhs will be collected by the builder and the building will be handed over. So total amount is 40. So in advance paid during the construction, amount is paid. Amount paid is 10 lakhs and the balance is paid after completion and handing over of the building. This is the first one. Second one, after completion means total 40 lakhs. Total 40 lakhs will be paid only after completion. He will get the total amount at the time of sale. That is, sale is after completion. Total amount is paid at a time. That is 40 lakhs is paid at a time after completing the construction. So this is the two types. So in these two cases, how the tax is levied? What is the tax liability? What is the tax liability? Here, tax will be paid by the customer, who is purchasing, but it will be collected by the builder and paid to the government. Okay, so that tax is paid by the seller to the, seller is the builder to the government, but it is collected from the customer only. He will not pay from his pocket. Okay, how the tax will be paid is, take the second one. Here, one more thing before this. So I told you, before, from the previous things, this real estate sector taxation comes, it was coming under service tax. After the GST is introduced, so it is brought into the, all sectors are brought into GST. So under the GST, from 1/7/2017, when it was introduced, so for all the projects, any project, for all the real estate projects, the rate was specified as 18% for any building. 18% was the specified rate, but the specified rate means original rate is 18%, but effective rate means, effective, you can understand later, effective rate means 12%. So for all the types of real estate project, the specified rate is 18%. That is, effective rate is 12% from 2017. So this real estate sector has enormous scope for the levy of GST, and so that the government will get lot of revenue also, and also revenue plus. So to encourage building or construction of residential projects in whole India, to encourage the construction of real estate in the residential field, that is residential real estate, what the government did in 2019, from 1st April 2019, this residential real estate rate, tax rates are reduced, but for the commercial, so both commercial and residential both are 18%, effective rate is 12%. But from 19, only for residential units, that is residential real estate, the tax rates were reduced, but for the commercial units, that is commercial buildings, for that the rate continued as it is. That is, specified rate is 18%, net effective rate is 12%. Still it is continuing with the same rate. For the commercial buildings, the same rate of 12% effective rate is continuing, but for the residential sector, residential real estate, the rates are reduced. So here, for that purpose, at the time of introduction of GST, there was one circular issued for the rates. Always they issue a circular or notification. So the notification was issued at the time of introduction of GST 2017. It's 11/2017 central tax within brackets rates. That is, what are the rates under the central tax means, you know, understand. In the GST, central tax means CGST. So if CGST is some percent, so GST also equal amount. The total amount will be double. CGST 5%, for example. Then SGST also 5%. Total will be 10%. Like that. So for that, they specified the rates. That is 18%. They specified in the this one 11/2017 notification. Okay. And here in 2019, they reduced the rates. And they made for the lesser percentage for the residential units. Okay. And here in the GST Act, there is one schedule. There are two schedules. Schedule 2. So what are all the things taxable? And Schedule 3 is called as negative list. Negative list means there is no tax. They are negative list means no tax items. No tax items not taxable is called as negative list. Under the negative list, it is given sale of land and building. So building will be sold with land only. Building will be constructed on the land only. Sold means the land for that building and building is sold. So sale of land and building for the consideration received after completion. So the total consideration you received after completion of the building, that means sale after completion. In that case, it is shown in the negative list means there is no tax. So completely after completing the transaction total, then if it is sold, there is no GST liability. It is given under Schedule 3. So it is negative list. So there is no tax. So if there is no tax, there is no good liabilities. If you pay the tax, then you will get the ITC here. Okay. So in the second case, sale after completion of the construction, there is no GST liability and there is no ITC also. But in the case of sale during the construction phase, then the tax is the GST liability is the arises. There is GST liability. So if there is GST liability, what is the rate of tax? I told you for the 2017 they introduced 12% net effective rate. So that continues. But here to encourage the residential unit, for the residential unit, the amount is reduced. Tax is reduced. For commercial, it is not reduced. So I told you for commercial, it was 12% net effective rate. It is same continue. So that is continues. That is 12% continues. This is for commercial building, 12%. For residential unit, they made 1% and 5%. What is the thing when 1% is levied when 5% is levied for residential units. That is residential real estate. Residential units 1% and 5%. But for commercial, the same thing continues. So for commercial, net rate, that's called net effective. These are also net effective rates. We will tell you what is meant by net effective rate. So this is 12% for commercial, 5% and 1% is for the residential units. Okay, now we will answer. So how this tax is basically? What is when we charge 1%, when we charge 2%, when is the 1% tax and when is the 5% tax? And what about the 12% for the commercial building? So for this purpose, this housing, commercial is okay, keep it aside. So for the residential purpose, the residential buildings, these residential real estate buildings, that is called flats or residential units. These residential units are divided into two types. One is affordable housing. Affordable housing means even the middle class people also can afford to buy that. That is cheaper rate. So for the affordable housing or affordable units, the rate is 1%. If it is not affordable, means rate is high. Then in such a case, it is 5%. So 1% for the affordable housing, affordable units, and non-affordable units, it is 5%. How you determine the affordable and not affordable? So for that purpose, it is given here. What is the meaning of affordable residential house? Affordable residential house means cheaper rate. The cheaper rate, how it is determined means here. These houses, they may be situated in the metropolitan cities and non-metropolitan cities. So what are the metropolitan cities? What are the conditions? For non-metropolitan cities, what is the condition? For affordable residential house. So metropolitan cities, there are some given: Bangalore, Chennai, Delhi, Noida, Ghaziabad, Gurgaon, Faridabad, Hyderabad, Calcutta, Mumbai. So these are given. In this Hyderabad in Telangana, only one city is given. In Andhra Pradesh, no city is given. So if the residential unit is from this metropolitan cities, there is one type, and all other cities in Andhra Pradesh, all the things are non-metropolitan only. So in the case of metropolitan cities, there are some other conditions. If the conditions mean there are, for each one, two conditions are given. Both the conditions must be fulfilled. If fulfilled, it comes under metropolitan cities, and our non-metropolitan cities, it comes. And according to this, here 1% will be charged. The rate is 1%. That is affordable. So if the units, either metropolitan or non-metropolitan, if it does not satisfy any condition, both must be satisfied. If the building, that is the residential unit, if it does not satisfy any one condition also, any one or both, if it does not satisfy, then it is called as non-affordable. This is for affordable unit, and it does not satisfy these conditions, it is called as non-affordable. In the case of non-affordable residential unit, it is taken as 5%. So this is 12%, 1%, they are all called as net effective rates. What is net effective rate? Actually, it is, I told you 18%. So net effective rate is 12%. Here now also, it is the same thing is continuing. Here also, original rate means specified rate is different. This is net effective rate that we will learn. Okay. Now here, what is the criteria? What are the conditions for the residential units in metropolitan cities and non-metropolitan cities to be taken as affordable units? We will take up in metropolitan cities first. In the case of metropolitan cities, the rate is 1%. I told you, the 1% is levied if two conditions are satisfied. One is the carpet area is 60 square meters or less, equal or less than, underline means less than or equal to. So not more than 60 square meters. So 60 square meters or less than 60 square meters is the carpet area, and the cost of the flat. Cost means that the amount paid to the builder. So builder will pay registration value, will pay many things, maintenance as well as other amenities, all this will pay. We are not taking into account only the value at which the price at which it is registered, the registered value, registered in the register office. So what is the registration value? That will be, in addition to that, we will pay maintenance charges for 2 years, 3 years like that, and we will pay some additional amenities like the generator or some other thing. So we will not take into account all these payments. We will take into account only the rate is only the registration value. So registration value should be 45 lakh or less. That is not more than 45 lakhs. So this is two conditions must be fulfilled. This is square. You will take what is meant by square meter. Square meters 60 or less, and rate the cost of the flat is 45 lakhs or less. Then only both the conditions satisfied. It comes under metropolitan cities. It is regarded as affordable residential house. In the case of non-metropolitan cities, that is other than these cities, so in Andhra, all the cities are non-metropolitan. In this case, also 1% is levied as affordable residential. In this case, the price or the registration value is the same in both the cases. 45 lakhs or less, not more than 45 lakhs. The value of registration value is the same, 45 lakhs, but the carpet area is more in non-metropolitan cities. Here it is 60 square meters. Here it is 90 square meters. Both must be satisfied. 90 square meters or less and 45 lakhs or less. So you take as 90 less than 90, less than 90 square meters, less than 45 lakh. Here less than 60 square meters, less than 45 lakh. So amount is same, but the carpet area is different. For metropolitan, 60 square meters, less than 60 square meters. For non-metropolitan, less than 90 square meters. So we take up, first of all, what is carpet area and what is square meters. But generally, so carpet area means not the total area which is registered in this, which is mentioned. That is, the carpet area means the total area of the building, it includes the common area in the veranda. So there will be common area. So opposite flat and upper flat, if both are will share the common area. That common area is not taken into account. And in the cellar, we will have car parking area. That car parking area also will not take into account. So excluding common area or common park area, only the area in the house. In the house means wall, carpet area means wall to wall area. That means the wall will be 6 inches at least. So the wall will not be taken. If you put carpet, how you will put from one wall to another wall will put. Below the wall, you will not put. So the wall will be excluded 6 inches. That is not taken into account. From wall to another wall, that is called from wall to wall you will put carpet. It is called the carpet area from wall to wall. So like that you will take, but it is double bedroom, triple bedroom, 4 bedrooms. It is immaterial, whatever it may be. What is the carpet area inside the house from wall to wall, all the rooms and everything you will measure. That is called as carpet area. So that carpet area should not exceed 60 square meters. Here 90 square meters. And cost is the same. This is that. So how generally we never measure the building area in square meters or square yards. Square yards we measure in the case of land, open land, we call it as, we take it as square yards. Okay. But here, and square yards in the sense, in some states in Telangana, we take it as square yards. That is the measurement of the lands. In some other area, Andhra area, in some places, it is called ankanam. So how many ankanams? How many square yards like that? That is the area. But here is common construction area. We take it as anywhere. We take it in the manner of square feet. We measure that in the square feet. So what is the calculation for the square meters to square feet? Square meters we convert into square yards, and square yards we will convert into square feet. So here, what actually 1 square meter is equal to 1.196 square yard. See here, 1.196 square yard. So 1.196 square yard means into how many square yards in square meters? 60. Into 60 means 71.76 square yards. For the metropolitan cities, 60 square meters means 71 points, let's say rounded off, 71.76 square yards. Each square yard is equal to 9 square feet into 9. So 1 square meter is equal to 1.196 square yard. 1 square yard is equal to 9 square feet. So if you multiply, so 60 square meters into 1.196 square yards is equal to 71.76 square yards into each square yard is 9 feet, 9 square feet into 9 is equal to 6.5.84, 6.5.84 square feet. So leave this decimal, just take, because it should be less than that. That is why take a 645. So 645 square yards, square feet. If in the metropolises, the carpet area should be less than or equal to 645 square feet and 45 lakhs, the cost, registration value. But in the case, this is metropolis. In the case of non-metropolises, the carpet area should be not less, it should be less than or equal to 90 square meters. So 90 square meters into 1 square meter is equal to 1.196 square yard is equal to 107.64 square yards. 107.639 means 64. 107.64 square yards. Each square yard is 9 SFT square feet into 9. If you take 968.76, leave the decimal, 968 equal or less than 968 square feet. So 968 square feet. So in the case of metropolitan, price is the registration value should be less than or equal to 45 lakh for both. It's okay. But the carpet area, in the case of metropolitan, it should not be more than 645 square feet. In the case of normal metropolitan, it should be not be more than 968 square feet. So that is the area plus value not more than 45 lakh. If both the conditions are satisfied, in these cases, either metropolitan, non-metropolitan, then it is taken as meaning of affordable residential house. In this both cases, in the metropolitan city, non-metropolitan, affordable residential house. So for this affordable residential house, the rate is 1%. So 1% is the rate for the affordable residence. How this one? I told you, net effective rate. Effective rate. What is meant by the actual specified rate and effective rate? So here, what is the specified rate and how you calculate the, effective rate? So in this case, the rate specified is, in this case, during 19. So in this case, from 12% they reduced. So in this case, 2019 circular number, that is a notification number. So in 17, the rates are fixed. So 11 for 2007 central tax, that is the notification. 2019 they issued another notification. 3 bar 2019 from 1st April. 3 bar 2019 of the central tax brackets rates. That is notification is meant for fixing the rates. So in this case, it is given. There are 3 types. One is affordable, another one is not affordable, another one is commercial. In this case, this is the notification specifying the central tax, means CGST. That means the equal amount will be, say, SGST, the total will be the total tax. In this case, first one, in this notification, the rate given is, I will tell you, rate given is 0.75% is the CGST. 0.75% is the CGST. That means SGST is also 0.75. That means total tax is, the rate is 1.5%. This is the rate prescribed in the notification 3 bar 2019 in 2019 for the residential houses. That is whether it is residential house means given. Residential means 1.5% for affordable. This one, affordable houses, it is 1.5%. Okay, non-affordable will go. Affordable houses, it is 1.5%. Okay, affordable is it. For non-affordable, for commercial, I told you before 19 also, it was 18% specified rate Net effective rate is 12%. That is continuing now also for commercial. So that will come. So here, for all these things, how you calculate specified rate will be different. 1.5% here, for second one, another one, and 12% is 18%. But effective rate means in the circular 11 bar 2017, the beginning, when they were fixing the rate, in that case, it is given that you see where whether residential unit or commercial building, whatever it be, where it is constructed. It is constructed on the land only, not on the sky. So it is not constructed on the sky. It is constructed on the land. That means, so if you construct a building having some 10 flats, so the land on which the building is constructed, that land belongs to all the 10 flat owners, isn't it? That means that is to be divided to all the flat owners. For example, if it is 500 yards or 500 yards, take 500 yards. If it is 500 yards, 10 flats means 500 by 10. Each flat owner gets 50 yards. But it is not handed out to him. It will be there only. It is not divided to persons. In the registration, they will collect the money, but it is not given. Say flat is handed out to him, but this land will not be handed. That is why this land will be share of each person 50 yards, but it is undivided, not divided and given to them. It is their share, but undivided. It is called as undivided share. So undivided share you will take up. Okay. So that undivided share also is included in the rate of the apartment. That is, in the residential unit, the builder will take for the land, for the building, our building area, the construction area, then common area, then parking area, as well as the land also. And for the land, the undivided share we will charge for our building, for our flat, we will charge 50 yards price, some price. So 50 yards he will get. So in this case, in the circular number, in this case, I told you, schedule 3. So land and building, if it is sold, if the amount is, that it is sold after completion of the construction, there is no tax. Similarly, in the case of only land, in the case of land, so land, sale of land, for that, there is no tax. For sale of land, there is no tax. There is no tax for the sale of land. That is why the rate which is 45 lakhs or whatever it may be, the price includes land price also. That is value of the undivided share of the land. It includes. That is to be included. That is, if the rate is something, in that rate, it includes the value of the land also. That means we have to reduce the value of the land. For example, if it is 45 lakhs, that is the total value. In that, for example, we take up as 12 lakhs, for example. 45 lakhs in this part. In this 45 lakhs minus 12 lakhs is the value of the undivided share of the land. So we remove that, the net amount will be 33 lakhs is the net amount after deducting the value of the land, because for the land there is no tax. It is to be excluded. So after excluding the land value, this is the amount. On this amount, we have to calculate 1.5% is 1.5, 0.75 plus 0.75. We have to calculate 1.75. 33 lakhs into 1.5%. So 49,500 will be the tax, isn't it? But in that circular number 11 by 17, during the first one, what they do is, so don't take the value of the land, the value of the land. Don't take the value of the land. Don't deduct the value of the land from the total value of the registration value of the residential unit. Don't take that. What you have to do is, it assumes which one, that the government assumed the value of the land, that is, the value of the land will be 1/3 of the registration value. In the registration value, 1/3 is the total value of the building. In that, take 1/3 as the registration, that is where the land value. So take that as the land value. and reduce. So the land value may be less or maybe more. Don't bother about the actual market value. Don't bother about the value. Take as 1/3 as the land value. So I told you, if it is 45 lakhs divided by 3 means 1/3, 15 lakhs is the land value. And here also, so this 15 lakhs is to be reduced from the value, it will be 30 lakhs. On the 30 lakhs, you have to pay 1.5%. But here also, land value, it is assumed fixed, don't change it. The land value may be more or less. 1/3 will be the land value. And also, this 1/3 value should not be reduced from the registration value. Don't do that. Sometimes some fraction, 30 lakhs, 66,000, something will be there. So to avoid all this problem, don't reduce the land value from the registration value. That is, you simply call it as value. Don't reduce from the total value of the unit, don't value of the flat. Don't reduce. What you are doing is reduce this 1/3 in the rate itself. So our rate is now 1.5%, isn't it? So in this 1.5%, in the rate, you reduce 1/3. Don't reduce in the value of the building. So divided by 3 means what is that? 0.5%. So 0.5% is to be reduced as the land value. So 0.5% minus 1.5 means it is 1%. So 1.5 in that 1/3 means 0.5%. Reduce that. The net rate, this is called the effective rate specified in the act. Specified rate is 1.5%, but after reducing the land value, the net rate will be, that is the effective rate. So for affordable houses, 1% is the effective rate. After, by charging this 1%, again you should not reduce the land value from the original total building value. Okay, but if you reduce the 1/3 in the building value and calculate rate at 1.5%, or without reducing from the building rate, building price, building value, reduce 1/3 in the rate itself and take the net effective rate, then also calculation will be the same. But sometimes there will be some fractions, it is a problem. That is why we have to calculate from, we have to reduce the 1/3 land value from the rate only, and the net amount only to be taken as the rate, and again don't reduce the value, that is land value, from the original value of the building. Okay, so 1% is the amount, that is 1% is the rate for the affordable houses. What is affordable house? Affordable house means in the case of metropolitan, non-metropolitan cities, satisfying both the conditions, then it is called as the affordable house, affordable residential house. Then reduce 0.5%, you will get 1.5% minus 0.5%. The rate will be 1%. And then in the same 3 by 2019, notification, the central tax notification. The second one is non-residential. For residential, affordable house, it is 0.75, means 0.75%. But next one, non-affordable house, it is given as 3.75%. That is, central tax is 3.75%. That is CGST. Again, 3.75%. LGST is total specified rate. Specified in that. Specified rate is 7.5%. Here also the same. Reduce 1/3 towards land value. Reduce from the rate only, not value. Reduce from the rate. Divided by 3. 1/3 divided into 1/3 means divided by 3 is equal 2.5% is the 2.5 is the land value. So from 7.5 reduce 2.5. Net rate will be, that is 7.5 minus 2.5 is the 1/3. The net rate will be 5%. So for non-affordable houses, that is that's houses, residential houses, which does not satisfy in both these cases, which does not satisfy any one of the condition, then it is non-affordable. For non-affordable house, the rate is 0.5%. That is, sorry, 5% is the thing. So we reduce the 7.5% minus 2.5, we get the 5%. This is for the residential house, which is non-affordable. So for non-affordable destinations, so 1% and 5% for housing, that is the residential houses, affordable 1%, non-affordable house 5%. The third one is if it is commercial. If it is commercial, it is also given in the notification 3/2019 central tax bracket rates means it is fixing the rates. In this case, it is given as central tax is given as 9. 9% is the central tax plus state tax means CGST 9 and SGST 9%. Totally, I told you already. So the specified rate is 18%. Specified rate is 18%. In this anything, any building will be constructed on land only. We have to reduce 1/3 for land value. So divided by 3 will be 6%. So 6% is the land value. So 18% minus 6%. If you reduce the land value, the net effective rate will be 12%. So that is the rate. 12% for the commercial buildings. For the commercial building, the rate is 12%. Now understand? So tax liability is for housing, that is residential houses. If it is affordable residential house 1%, non-affordable residential house 5%, and commercial building 12%, it is continuing from 17. Even before 19 also, the effective rate was 12% only. Total 18 minus land value 6%. It is fixed by that. And the net effective rate will be 12% for commercial household. Okay. Okay. Now, so when they are paying here there is no GST. So there is no ITC. But here we are paying the GST. When the GST is paid, we can claim the ITC. Then how to claim for the ITC? What is the rule? See here, during 2019, the rates for the residential houses are reduced to encourage the reduced very much to encourage the residential housing. For to encourage the residential housing, the rate is reduced very much on the condition that the builder cannot claim the GST because the amount itself is reduced very much. Reduced. That is why the rate is reduced. So we should not, you cannot claim the ITC. That is why for residential houses, whether it is affordable, non-affordable, both for 1% and for 5%, there is no ITC. So residential houses, there is no ITC. Remember, residential houses, there is no ITC. But for commercial houses, commercial building, so the rate is continuing from the beginning. So we are paying the full amount. That is why that for the tax rate of 12%, that is for commercial buildings, ITC is eligible. So the builder can claim the total ITC. You remember one thing, you will be confused here. ITC means, so not the amount paid under this one, not the amount paid 12%, it is 1%, 5% paid, that will not ITC. Here 12% you are paying. ITC eligible means this 12% is paid by the customer. Paid the customer and the builder will pay to the government. The customer, if it is a company or business, if it is registered, they will claim the ITC. If it is a consumer, purchasing the house and using the house, so he will not have registration. He cannot claim. So the customer who purchased this house can only claim this one if eligible. But eligible means who? I am talking about the builder. Builder is eligible to take the means for construction of the building. He will purchase material and he will give pay for the labor charges and all the expenses for all of them. For services, that is called as inputs, means cement, steel, bricks, everything. That is called the material. Inputs, input services means carpenter, mason for building, carpenter, plumber, electrician, all these are giving services. So for the services, for the material also, when he is purchasing, he will pay the tax. So GST. So on the GST, he can claim the full ITC if it is a commercial building. The ITC means not on this 12%. If this 12% is paid, collected from the customer and paid to government, the builder can claim ITC from his purchases. ITC means the amount which he paid for purchasing the material and labor. That can be get back, I mean claimed back. That can be claimed as ITC. Understand this one? Understand? And then here, there are one more thing is, I told you, it is in the case of residential project, residential housing, 5% and 1% is for residential. For commercial, it is 12%. But for commercial also, in one case, For commercial also, commercial building also is 12%. Commercial unit, it is 1%. You take the shop, commercial shop, it is 12%. Okay, but sometimes for the commercial shops also, 5% will be levied. 5% will be levied with no ITC. If it is 5%, no ITC. With no ITC, 5% can be levied. Then when it is levied? So residential 1%, 5%. For commercial also, 12% commercial, but in one case, 5% also is levied. Here you see, this is affordable residential 1%. Non-affordable, 5%. Commercial complex 12%. But in the case of commercial complex also, in one case, 5% is charged. 5% only is charged. When it is charged, and also then you'll take up later. When it is charged means, see, in this case, we are constructing residential flats. There is it. But generally, in the residential flats, in the first floor or the ground floor, shops will be constructed. That is called commercial shop or office. What total building is commercial, offices, businesses, anything. So then it is called totally, it is a commercial building, 12% is charged. But if only one ground floor or something is constructed, that is commercial, and the first floor, second floor, third floor, they constructed. All these are residential units only. In such case, it is called as the commercial unit. The commercial project, commercial house is part of residential house, residential units, isn't it? It's a part of the residential building. In such a case, how to claim? On the residential, he cannot claim. At the residential, it is 1% or 5%, isn't it? But on the commercial house, it is 12%. But now, it is part of commercial house is also part of this residential houses, residential building. In such a case, how to calculate? So on this 12%, on the residential houses, it is 12%. In this case, one concession is given. See, you know already about the carpet area. So on all the total carpet area means carpet area of the commercial house as well as commercial house as well as residential houses. The total carpet area you take. So total carpet area, including the commercial and residential, total carpet area is 1,000 square feet. 1,000 square feet. So that is the total. Take the total of the carpet area. The total is 1,000 square feet. 1,000 square feet. In this, you take the carpet area, the only the commercial house. Take the commercial house and see if the commercial house, the carpet area of the commercial house is not more than 15%, 15% or less. So not more than 15% of the total commercial area. For example, 1,000. In this 1,000, the carpet area of the commercial house is only 10%. Only 10%. That is not okay. It is only 100 SFT. For example, it's a small one. If it is 100 SFT, in such a case, how you will calculate? 100 SFT, that is commercial area is 100 SFT divided by total 1,000 SFT into 100. That is, first of all, in the numerator, the commercial area will take up divided by the total area into 100 if it takes, that is the percentage. And how much percentage? 10% is the commercial area on the total carpet area. So if the carpet area is less than 15%, then this commercial house is also treated as residential house only, because it is a part of commercial house which is part of residential real estate. So if a part of residential project real estate is residential real estate, then the total project, total building will be taken as residential real estate project only. Then if the in the total including this commercial as well as residential, in the total carpet area, the carpet area of the commercial house is not more than 15%, then the total building will be taken as, total house will be taken as commercial residential unit, that is residential real estate project. If it is residential real estate project, the rate will be, because commercial means it is, rate will be more. So 5% is charged in this case. In this case means, if the area of the carpet area of the commercial house is not more than 15% of the total area, that means area of the commercial building divided by total area of the all the houses, in that into 100, if you take, you will get, that is 100 is the commercial area divided by total area is 1000 into 100, if you take into 100, it will be 10%. So less than 15%. In this case, this commercial house is also taken as residential real estate only. Then only 5% will be charged. So this is the one instance of 5% without ITC. 5% imposed for commercial house also. For example, say for example, 175 is 175 square feet is the carpet area of the commercial house. Divided to total is 10,000. Divided by 1,000. Divided by 1,000 into 100. It is 17.5%, means more than 15%. In such a case, more than 15%. In such a case, for this commercial house, tax will be levied at 12%. Commercial complex, commercial house is 12%. So for this commercial house, that for this carpet area and for this commercial house, tax is imposed at 12% because the carpet area is more than 15%. So if it is less than or equal to, not more than 15%, for commercial also taken as residential unit. If it is a part of the commercial building, for ground floor shops and all the other floors residences, then total carpet area will take, and the carpet area of the commercial building divided by the total area into 100, you will get the percentage. If it is 15 or less, then it is taken as residential, only 5% will be charged. Otherwise, if it is more than 15%, it is taken as commercial, then 12% will be charged. But for this, if 5% is charged for this commercial building, no ITC. If 12% is charged, you can claim ITC. I mean, for the expenses paid by him, he can claim the tax paid by him. When purchasing, he can claim this one. Okay. So this is about the rates. So affordable, non-affordable. Residential houses, 1%, 5%, no ITC. Commercial house, 12%, if it is completely commercial. If the commercial house is part of residential house, the total the carpet area of that commercial house is not more than 15% of the total area, then it is also taken as residential unit, then 5% will be charged, otherwise 12% will be charged. Understand this? This is about this one. And here see, one on commercial properties, GST at 12%, old rate continues. So the old rate is continuing for commercial products. And if the building, residential or commercial, sold after construction, then no GST. The old provision also the same thing. New provision also the same thing. When in the new old provision also, when it is sold after completion of the construction, no GST. The same thing is continuing. Okay. There is one more topic in this. One more topic in this, because the video will be next video. These two we will take up, so that will be lesser. So in that I will include another one. For example, the same example. One floor, that is ground floor, is commercial. All the other floors are residential. If the ground floor commercial house carpet area is more than 15%, that means 12% is to be charged for this. 12% is to be charged. So for the residential houses, the first, second, third floors, for the residential houses, there is no the tax is only 1% or 5%, no GST, isn't it? But for commercial, it is 12%. How you would calculate? For example, we are purchasing cement, steel, bricks, all these we are purchasing. So we use them both for commercial as well as the residential houses also. So how to divide? Because if you are maintaining separate account for the commercial building, what are the material we are using? Materials, inputs, as well as input services for the commercial building, commercial house, and what we are using for the residential house. Separately we are maintaining, then no problem. For the commercial house, it is 12% and 12%, and we can take the total for that commercial house, whatever you spend, we can take the total ATC. For that residentials, the charge is, the rate is 1% and 5%. There is no ATC. If we cannot divide, we cannot divide. We are purchasing and using them. We cannot note down, we are not maintaining. So we are using that for commercial as well as residential also. We are using. In such a case, how to divide, how to claim the ITC. We are spending for that. Whether it is separately written or completely used, the using of the material will be the same. In such a case, for that, how you can claim the ITC. So totally we are using. Now there is not separate. That means the inputs and input services cannot or not or cannot be separated for commercial, and because the commercial house is also part of the residential houses. So ground floor is commercial, other floors are residential. In such a case, how you will calculate? If it is not separate record is not there, then how you will calculate? For that, there is one rule called as rule number 42. Follow that rule. If you follow that rule, we can, according to that rule, how you can claim the ITC. That we will take up in the next part. Okay. So with this, I am stopping this. Please, I am telling again, other videos also, this video and the coming videos, you please follow the videos carefully, not one side, even 2 times or 3 times you follow, then only you can understand, and watch the video completely and then like the video. And please, everyone visiting my channel, please subscribe to my channel, click the bell icon and select all, you get notification for all the videos which I upload, and share my channel with all your friends also. And one more thing is, I am undertaking online classes also. If you are interested, anybody, you can contact me and you can join the classes. And with this, I am closing the session today, and we will meet in the next video for the other class. Okay. Thank you. Bye. Wish you all the best.